rules for non-banking financial companies with respect to their loan book securitization. This in a bid to provide some liquidity to the sector. Ritu joins us to help us out and understand all what's happening in terms of the space. Ritu, what do the changes suggest?
RBI has relaxed rules for NBFCs to sell or securitize their loan books in a move that will help ease some of the persistent stress that we've been seeing in the sector. So now NBFCs will be allowed to securitize loans of more than 5-year maturity after holding them for 6 months on their books, as opposed to the earlier norm that required them to hold on to these assets for at least a period of 1 year. However, this relaxation on the minimum holding period will be allowed only when the NBFCs retain at least 20% of the book value of these loans instead of what the earlier norm was of about 10%. Primarily, this move will benefit housing finance companies because their eligible portfolio available for securitization can now increase on the back of these norms. Separately, in another notification, RBI has also operationalized the 5% interest subvention rules for small and medium enterprises, which would essentially help them get pre- and post-shipment export credit on easier payment terms. This again is in line with what the government has been trying to do to boost credit flow to the MSME sector. Do remember, concerns over liquidity and some sort of support to MSMEs have been one of the key areas of discussion, if I were to put it that way, between the central bank and the government. So these moves will certainly help matters in the December 14th board meeting of the RBI.
Thank you, Ritu, for that. So keep an eye out on NBFCs and trade today. But new back series GDP data released by the government came under much attack after the average growth rate from fiscal year 2006 to 2012 was revised lower from 8.2% earlier to 6.9%. Now, we spoke to Sudipto Mundle, the chairman of the Committee on Real Sector Statistics, which was constituted by the National Statistics Commission. Now, his report has actually been withdrawn by the government, which termed it experimental. Now, he said that it is unfortunate that statistics like GDP has become a subject of political slugfest.
It's very unfortunate that, national statistics, whether of GDP or anything else, becomes a subject of a political slugfest between the ruling party and the opposition and so on. This is really not the healthy way in which you want to generate data. And I have one takeaway from all this for all of us is to try and ring-fence the statistical production system from government so that these types of controversies don't arise. When my committee was meeting, and by the way, the CSO was the secretariat for my committee. This is not something that they
didn't know about.
From.
Okay.
So, they were there, and we kept requesting them for 1 year to complete whatever work they were doing, but they said they were doing some calculations with their new numbers and so on.
Right.
Till last July, they did not. And if they had a problem with what the numbers that were being put out then, they could have written a note of dissent or something. There was nothing like that.
Okay. Can it be that the GDP rate is so much lower compared to the current period when savings rate has dipped below 30%? And we are apparently showing a higher average growth of 7.3. The average for those 7 years, I calculated in the new series, it comes to 6.9. Doesn't this look a little difficult to gel?
The investment rate, which is what matters, had peaked just before the global financial crisis in the year 2007-8 at somewhere around 35% and is now down to around 28%. Or thereabouts, and it's been steadily coming down. It's not as though it's suddenly come down.
Yes.
It has been coming down. Now, in that particular year of 2007-8, because you're talking about internal consistency, I think that is the important problem. We can't really discuss data source and all that without getting into indeed. But the internal consistency, I think there are some issues, which I think the CSO needs to look at, because somebody or the other these numbers are now going to be scrutinized very carefully, and people will raise these questions. One must always be careful when producing GDP estimates and so on to keep an eye on whether it is consistent with everything else. This is what you might call triangulation, that other sources of information, does it fit? And I mentioned a couple of them. You mentioned another one about, credit, and I agree with you that these are questions that, the CSO must now think about addressing, because people will ask these questions.
Do you think the presentation of the data should not have been by Niti Aayog? That gave it a political color?
I mean, they have a role in this. But on hindsight, I think it may have been in the interests of the government to let, MOSPI deal with it and maintain a distance.
And the GDP data for Q2 is due today. Ekta is with us to run us through all the expectations. Morning, Ekta. What do we expect there?
Well, morning, Nigel. This GDP data is again going to be backdated information that we're going to work with. But nonetheless, it is important to give an overview in terms of where we are when it comes to growth. Now, I just want to point out for this time round, the GDP for Q2 is expected to come in at 7.4%. This will be a slowdown as compared to 8.2% in the last quarter, which was in fact at an 8-quarter high. And the GVA as well is expected to soften to 7.3% versus 8% on a Q-on-Q basis, but on a year-on-year basis, the growth is expected to continue. So 7.4% in an estimate on the GDP compares to 6.3% year-on-year and compares to 6.1% for the GVA on a year-on-year basis. Now, I just want to point out that the reason why we're going to probably see this softness Q-on-Q is expected to be led by slower industry as well as agri growth. Services, however, is expected to see momentum improve on a sequential basis, and services is likely to be aided by higher government spending, which would be probably public administration. So keep your eye out on that particular figure within the services constituent. Now, in terms of agri, it's expected to slow down to around 3.7 versus 5.3% Q-on-Q, but grow versus 2.6% same time last year. And also agri has been steady despite erratic monsoon. Food grain output has been up around 5% Within industries with construction is probably expected to slow down to around 7.3% versus 10.3% Q-on-Q, but grow at around versus 6.1% year-on-year. Now, within industries, watch out for manufacturing. That would be the key constituent. The range is wide, anywhere between 7 to 9% versus 13.5% last quarter. So there is a slowdown which is expected Q-on-Q, but year-on-year, the growth should look good for the GDP.
Okay, so some moderation perhaps on a quarter-on-quarter basis, but annually you should see some steady growth coming as far as GDP goes.